Hi everybody, Alex Deployer from Expert Forex, and in today's video I want to discuss the impact of the coronavirus on Forex trading. Very important topic, and also a very important topic to people who are losing lots of money in other financial investments. Now, last week was totally disastrous for the stock markets throughout the world, and on your screen you can see the losses that were incurred during last week. There have been slight recoveries late in the day on Friday, but really huge losses. In contrast, the Forex market has suffered very few losses, and in fact there were a lot of gains that were happening, and I've only included certain currencies here, but overall you'll realize that there are as many gains as there are losses in the Forex market, and therein lies the opportunity and safety of Forex trading. So if you look at the major currencies that are being traded in the Forex market, and I've got a list there of the top 8, you will see there are gainers and losers. It's a zero-sum game. So what the one currency loses, a group of other currencies gain. So you will see that the totals of the reds equal the totals of the greens in all cases. So we're monitoring the Forex market on a 4-hour, 6-hour, 12-hour daily basis, on a weekly basis, and on a monthly basis, on a 3-hour basis, because it is essential that we know who the gainers are in the market and who the losers are. So you buy the gainers and you capitalize by selling the losers. And that's why this kind of information is absolutely critical over the next few weeks. Because how the Forex market reacts to the coronavirus will be reflected in the strength and weakness of currencies, and you can take advantage of that. With the fear of not making these huge losses that the stock markets are making, because if you get on the right side of certain currencies and you back a strengthening currency that is positively geared towards this virus, then you will gain all the way. Plus, the Forex market is leveraged, so your gains will be multiplied. So those are the opportunities that are available in the Forex market, in that you have a closed loop. What the euro gains, the yen might lose, and that kind of thing. So here's an example of that. It shows the winners and the losers over various time frames. You can also look at the weekly in a lot more detail. So you can see the euros gained so many pips, and here you can see how those gains are made up. It's gained against the US dollar, the pound. It's lost against the yen, the franc, New Zealand, the CAD. So you can see that this is a closed loop. The winners are equal to the losers overall, and you can see where the winners and the losers are for every particular currency, for every time frame. So we can actually look at it at a 4-hour time frame, at a 1-hour time frame, that kind of thing, and get this kind of picture. I'm using our 360-degree Forex indicator for this. It updates every single minute, so it is 100% up to date all the time, and I will be glued to this indicator over the next few weeks to see how the market responds to the coronavirus. Here you can see more detail of the euro in specific compared to its trading partners over time. So this indicator gives you a 3-dimensional view of the market, and you can use it any way you want to. The other thing that I almost forgot was that what is causing this particular fall is that there are lots of sellers in the market but no buyers. In the Forex market, you just don't have that situation. You have almost guaranteed liquidity. In the 20 years that I've been a retail Forex trader, I have never been refused a trade. and the trades are instantaneous. So you don't have to go out into the market and look for a buyer if you're selling or a seller if you're buying. that liquidity is automatic in that when you're trading. When you put a deal on, it happens immediately. And that is the problem in the stock markets. There are lots of sellers at the moment, but no buyers. So I hope you've enjoyed this video, and also it has given Forex traders the sense of security that they know no matter what happens, the Forex market is not going to collapse. Prices are made up because of the difference between a strong currency and a weak currency. So overall, the winners equal the losers in this market, and there's no fear that the market as a whole will drop. What might happen is that the volume in the market might decrease because of lower economic activity, but the prices will still remain there. They will still be prices that move up and down compared to the other trading partners of that particular currency. So it's a closed loop, and all you have to do is be clever enough to identify the strong currencies and to identify the weak currencies to profit from that kind of movement. So the opportunities in the Forex market will always be there in spite of complete havoc in the rest of the financial markets. From me, Alex Employee, cheerio.